There is a particular kind of power that does not announce itself. It does not arrive in a motorcade. It does not wear a tailored suit to a congressional hearing. It does not appear in the society pages of the newspaper. It sits quietly at a corner table of an ordinary diner, orders the same breakfast it has ordered for 30 years, and watches the room with the careful patience of someone who has already calculated every outcome before anyone else has finished reading the menu. Meyer Lansky was that kind of power. The Federal Bureau of Investigation pursued him for more than 40 years. The Internal Revenue Service audited his finances with a precision that bordered on institutional obsession. Interpol tracked his movements across 3 continents. Grand juries were convened. Wiretaps were authorized. Entire task forces were assembled. Careers staked on the ambition of being the person who finally brought him down. And when Lansky died in January of 1983, investigators examined his estate and found assets valued at approximately $57,000. $57,000. That figure, in the context of a man the FBI internally estimated controlled near $300 million at the height of his influence, is not merely a number. It is a question that has never been fully answered. But the money was never really the story. The system was. The child who would become Meyer Lansky arrived in America around 1911 as Meyer Suchaljansky. He came from a region of the Russian Empire that is now part of Belarus, from a family that was Jewish, poor, and navigating pressures that drove hundreds of thousands like them westward across the Atlantic. The Lower East Side of Manhattan, where the family settled, was one of the most densely populated urban environments in the world. Tenement buildings held far more people than designed. The streets were loud with a dozen languages. There was opportunity, but it was narrow and required navigation. And for a 9-year-old boy who spoke almost no English, navigation was not a metaphor. It was a daily necessity. What observers consistently noted about the young Lansky was his relationship with numbers. While other students labored through arithmetic, he processed figures with a speed and accuracy that seemed almost involuntary, as though the mathematics were happening to him rather than being performed by him. It was a gift. And in the ecology of the Lower East Side in the early 20th century, gifts had very specific applications. Intelligence in that neighborhood was not admired. It was used. The meeting between Lansky and Benjamin Siegel, the man newspapers would later call Bugsy, though never to his face, has passed into mythological territory where details shift depending on the source. What most accounts agree on is the essential chemistry. 2 young men who immediately recognized in each other something complementary and necessary. Siegel was physical, magnetic, capable of a violence that was more instinct than strategy. Lansky was precise, controlled, capable of a patience most people around him could not sustain. Together they were more complete than either was alone. And from the informal operations of their early years, the street games, the small ventures that sat just outside the law, they began to build the habits of mind that would define everything that followed. When Prohibition arrived in 1920, it handed organized crime the single greatest economic opportunity in American history. The federal government had made the most popular consumer product in the country illegal, meaning whoever could supply it reliably and at scale would accumulate wealth at a rate legitimate business could not approach. Every ambitious criminal understood this. What most did not understand, and what Lansky grasped almost immediately, was that the opportunity was not simply commercial. It was organizational. Raw volume without structure is chaos. Moving alcohol from production to distribution required supply chains, transportation networks, storage arrangements, relationships with corrupt officials, and accounting systems sophisticated enough to minimize exposure. It required a business, not a street operation, a business. What Lansky built during Prohibition was not an empire. It was a methodology. The alliance that emerged between Lansky Siegel and the young organizer who would become Lucky Luciano was built on a recognition that ethnic boundaries and organized crime were economically counterproductive. The Italian-American underworld had reach and muscle. The Jewish gangsters had financial sophistication and organizational discipline. The combination, formalized through agreements in the late 1920s and early 1930s, became the structural foundation of what historians would call the National Crime Syndicate. Lansky's role was singular. not enforcing territory, not making displays of authority, but understanding how money moved, how it could be insulated from detection, how the mathematical reality of the operation could be separated from the legal liability of the individuals who ran it. In a room full of dangerous men, that made him arguably the most indispensable person present. The gambling operations Lansky developed through the 1930s and 1940s reflected a principle elegant in its simplicity. Wealthy people travel significant distances to gamble if the environment justifies the journey. Provide the luxury, the service, the atmosphere, and the mathematics of the games will do the rest. He operated casinos in Hot Springs, New Orleans, and Florida. These were not backroom operations with bare bulbs and card tables. They were carefully designed environments with trained staff and the kind of attention to experience that the hotel industry was only beginning to systematize. But the Cuba chapter was something different entirely. Beginning in the late 1930s and extending through nearly 2 decades, Lansky cultivated a relationship with Cuban strongman Fulgencio Batista that transformed Havana into perhaps the most sophisticated illegal casino operation in the Western Hemisphere. Political protection combined with genuine hospitality infrastructure and offshore financial positioning made the money flowing through it extraordinarily difficult to trace. The Hotel Nacional, the Riviera, a $14 million property Lansky financed and helped design with the attention of someone who understood the building itself, was part of the financial instrument. A dozen other operations, all generating cash at a scale that required active engineering to handle without leaving traces. And then, on January 1st, 1959, Fidel Castro came down from the Sierra Maestra Mountains, and everything Lansky had built in Cuba over 20 years dissolved in a single night. The estimated loss ran between $7 and $17 million. There was no legal recourse. The revolution did not negotiate. Lansky moved on. He always did. But Cuba reinforced a lesson that would define the architecture to follow. Dependence on any single political arrangement, no matter how well constructed, was a structural vulnerability. The mechanism Lansky is most associated with is what became known as the skim. The concept was not his invention. Casino skimming had existed wherever gambling had existed. What Lansky did was systematize it and scale it across multiple properties simultaneously. The mechanics were precise. In the interval between a casino's daily cash being counted and that count being formally recorded, before figures entered any ledger, before any tax calculation became possible, a percentage of the physical currency could be removed, simply redirected, made to not exist on paper. As far as any taxing authority was concerned, it never had existed. The money was real, the record of it was not. That distinction was everything. By the late 1950s and into the 1960s, Lansky had helped construct systems that allowed multiple Las Vegas casino properties, with different nominal owners, different corporate structures, different surface-level relationships to different crime families, to coordinate their skimming through a unified financial management approach. An FBI agent tracing this architecture described the experience to colleagues as trying to catch smoke with his hands. Every time a solid connection materialized, another layer appeared beneath it. Another entity, another jurisdiction, another intermediary whose involvement was technically legal and whose relationship to the underlying operation was nearly impossible to prove in court. The Swiss banking system offered something Lansky recognized as structurally significant: legal walls. Not practical obstacles. Actual barriers encoded in Swiss statute that made disclosure of account information to foreign governments a criminal act. The moment money crossed into a Swiss institution, after passing through intermediate entities in jurisdictions chosen for their opacity, the United States government was, for practical purposes, blind. Cash from domestic operations layered through local businesses. From there, offshore through the Bahamas. From the Bahamas, into Swiss accounts held in shell corporations registered in Panama or Liechtenstein. Layer upon layer, each legal, each adding distance between the money and the man. It was not a criminal scheme. It was a legal architecture built by someone who understood law better than most lawyers. The FBI's internal estimate placed Lansky's hidden assets at approximately $300 million by the early 1970s, exceeding $2 billion in today's terms. The critical point is not the size. It is the qualifier that always accompanied it in official assessments. None of it could be directly attributed to him in any court of law. The government's pursuit of Meyer Lansky was one of the longest investigations in American law enforcement history. It was also, by almost any measurable standard, a failure. The irony was visible to anyone who looked. Lansky was not hiding. He lived at a fixed address in Miami Beach, walked to the same diner every morning, walked his small dog along the same streets every evening. FBI teams photographed him from parked cars across the street. He was right there. He was simply, from a legal perspective, untouchable. The IRS attempted the approach that had brought down Al Capone. Tax evasion. The problem was that proving unreported income requires first proving that income existed. On paper, Lansky had almost none. He owned nothing in his name. He appeared on no payrolls. He had no documentable revenue streams. He was, on paper, a man of extremely modest means who happened to know notable figures in organized crime. The challenge was not finding the man. It was finding the proof. And those were entirely different problems. In 1970, as investigative pressure reached a new intensity, Lansky traveled to Israel. Then, enforcing its law of return, which granted automatic citizenship to individuals of Jewish heritage, the calculation was clear. If Israel accepted him as a citizen, extradition would become legally complex and politically fraught. The Israeli Supreme Court declined, ruling his background placed him within the statutory exceptions. He was placed on a plane back to the United States. The charges fell apart one by one. Witnesses died, not mysteriously, but of the ordinary mortality that affects 70-year-old men during federal proceedings. Others declined to testify. Wiretap evidence was challenged on technical grounds. In 1973, the primary conspiracy case against him was dismissed. By the mid-1970s, the government's case had effectively collapsed. The last decade of Meyer Lansky's life was lived at a scale almost surreally small given what preceded it. He and his wife Teddy occupied a modest apartment in Miami Beach. Not a penthouse, not a waterfront property, but a regular apartment on a regular street, the kind of place a retired schoolteacher might reasonably afford. He walked his terrier along Collins Avenue each morning. The FBI surveillance never fully stopped. Agents in parked cars continued documenting his movements long after any realistic prospect of prosecution had evaporated. One dimension of these final years that consistently surprised observers was his relationship with his son Paul, who had been born with cerebral palsy and required ongoing care. By all credible accounts, Lansky was genuinely and attentively present. Not the distracted patriarch managing obligations from a distance, but a father who spent real time, who worried, who made careful arrangements. It is a detail that sits in complicated tension with everything else in the story. Not because it redeems anything, but because it is human. And the most consequential figures in any era become more comprehensible when the human details are allowed to exist alongside the historical ones. What he had constructed outlasted him. Whether it survived him is a different question entirely. When Lansky died in January of 1983, investigators went looking for the money. They found $57,000. 3 serious theories have circulated since. The first is succession, that the financial structure survived him, managed now by the Swiss bankers and international intermediaries who had always been the operational layer, no longer attributable to anyone with his name. The second is loss, that the economic turbulences of the 1970s eroded offshore wealth and reduced $300 million to something far less. The third is the most consistent with everything known about how he operated, that the invisibility was the point. That a man who spent 60 years ensuring nothing could be proven had arranged, with the same precision he applied to everything else, for the final chapter to be unreadable. The most powerful thing he ever built may have been the uncertainty itself. What history can say with confidence is this: Meyer Lansky understood financial systems at a level most legitimate professionals of his era did not. He applied that understanding to an architecture that confounded law enforcement for 4 decades. He lived his entire adult life under surveillance, under investigation, and under the sustained pressure of the most powerful government in the world. And he died in his own bed, in his own apartment, having never been convicted of the charges that defined his reputation. Whether that represents a triumph of intelligence, a consequence of institutional failure, or something in between is, finally, a question without a clean answer. And perhaps that is the most honest thing that can be said about Meyer Lansky. He left the world in the same condition he navigated it, full of questions that had no simple resolution.